Mr. John Najarian on deck, standing by. John, Dr. J, what's going on, my man?
What's going on, big dog? I was just, it was so busy today, I didn't get a chance to have my lunch.
Hey, man, you know, that definition has blurred the line for me. Like I said, I wake up, I check markets, I blast the emails that I got blast, I try and get a power nap somewhere around lunch, and then by the time I'm down here at Siebel, I'm just trying not to spill my coffee.
Well, I mean, it is a great market for traders. And I'm sure all the traders that love what you do, Oliver, are focused in on, you know, trades like you and Brent were just talking about. I'm still really big on a lot of these defense names. Because
we're talking about that geopolitical trade a bit.
Yeah, well, the volumes have been crazy. I mean, RCAT. This is a guy from Puerto Rico. Well, he's not from there, but he lives down in Puerto Rico with me, Jeff Thompson. And he's got drones that they sell to the military, and they are killing it.
What's his ticker, John?
With RCAT.
Oh, RCAT, yeah.
Yep.
I forgot about that one.
I mean, it's doubled nearly since mid-December. Mid-December. I mean, here we are one day away from mid-January. So in a month, do you like stocks that go up 100%? I do. Yeah. What about VWAV? VWAV. We talked about this one. We had a big webinar, last Thursday. And it was one of the stocks on my list back then, Oliver. VWAV.
How deeply liquid are these markets, John? Are these risky trades?
Well, I think they're extremely liquid. These guys are trading extraordinary volume. That's why they popped up on our scans. But, you know, when you're looking at the right side of the screen that Oliver just put up there, folks, that is a huge move in a very short period of time.
Vol just went bananas in the weeklies for VisionWave, right? VWAV?
Yep, VisionWave. You know, looking around, like I said, ONDS. I was on with one of your compatriots on the broadcast field, Liz Clayman, and aerial intelligence connectivity that enhances security for defense and so forth. In other words,
West Palm Beach, Florida.
Palm Beach, Florida based.
Yeah.
The fact that the Department of War is focused in on these stocks, it'd be kind of stupid to not at least keep them on your watch list, because when Trump, or in this case, the Department of War, says, I really like L3 Harris, and I'm going to give them $1 billion to spin out their rocket motors and so forth into a new stock, I pay attention. And last week it was Trump talking about, I don't like that Blackstone, BlackRock, and all these guys have been buying up individual homes. What happened to Lennar? What happened to D.R. Horton? What happened to all these home? Boom, to the upside.
Yep.
You know, I pay attention. I mean, you know, again, you and Brent were talking about, you know, when you've got a pair of twos, I think you've been dealt a full house if you're in any of these stocks.
That's what I'm saying. Press your 53%. Here's what, John, here's where yeah, well, because the point that I made to Brent right after that, which was that geopolitics, basically trying to trade geopolitics, is like the most reliable losing trade in my mind, because the market generally goes up. However, that's on the index level, because hype can't take down the stock market and the capitalist, machine that's running unless it actually comes to fruition. But it doesn't have to come to fruition for people to buy the machinery, to buy the drones, to buy the radar. So on the stock specific level, I think some of this can make sense. If you think you want to trade geopolitics, I would say you're probably better off doing it on the stock level than the index level, because everything else is going to overpower it on the index level. That's my view.
Yeah, and you know, you've been around it long enough, Oliver, to know that we see rotation on a daily basis. More or less, if you look a little bit longer term, over a week or a 2-week basis, sometimes as long as a month, you'll see a significant rotation. We've already seen it out of a lot of the high-profile tech names in the Mag 7. And does it mean you shouldn't own those stocks? Of course not. But what it does mean is that there are opportunities created when people are exiting those stocks and getting into the defense stocks, for instance. There are opportunities in, stuff like, any of the high performance computing and things like that, or high bandwidth memory. That's a phrase that you'll be hearing a lot more of, folks. High bandwidth memory. That's what Micron does, MU. Whether it's dynamic random access memory, DRAM, or whether it's NAND or NOR. I mean, any of these are things that make the AI run faster.
Sure.
You need that kind of memory. And these days, I mean, it was just yesterday, Oliver, Huntington, HII Huntington, they talked about the successful testing of their autonomous launch.
Wow. I didn't realize that chart was doing what it's doing. That's amazing.
Yeah. I mean, when you're talking about launch and capture of a vehicle from a ship, I mean, these are exceptional technologies. And you know what's in every single one of them in one way or another? AMD, Micron, to make the AI work. That's just the way it is. And so you don't just have to think about, defense stocks, or what goes into a data center, or this or that. What are those data centers, or what is the Department of War running right now? Well, they're running an awful lot of tech, high tech, like when our growlers went into Venezuela and shut down their radar and so forth. And now all of a sudden the whole country's blind. And you and I think, joked a little bit about it a week ago or so when we said, who sold them their defense? Timu? I mean, it's that's tongue in cheek.
Well, because that's what happens when you put your economy, into a shadow of the rest of the world, and don't have open markets and don't have open information. You fall behind by a couple generations, and suddenly your toys don't work very well against America. I mean, I like the idea of kind of building up maybe a sort of a basket of these things to take multiple plays. Like you could there's also ETFs, by the way, but I just feel those two, like, look at ITA. That actually looks pretty good. So I guess, that is one way to do it for those that, maybe don't have the, capacity to take a single shot or two on company names, because then if you hit or miss, you kind of live and die by that. The ETF route through ITA is not a bad looking chart, but you're also just going to have to be patient and sit it out to some extent. You're not going to get the potential kind of convexity, obviously, that you would if you were trading options. I think, John, also the fact that these charts are holding in, whether it's the defense names, if it's the memory names, the Micron chart looks fine too. All that kind of points to me, in addition to metals being up today, as this being maybe just a brief little spurt of volatility rather than some kind of, reordering of the deck entirely.
Yeah. I mean, and, look at how much stuff we had thrown at the market in the last 48 hours, 72 hours. You had Iran and, wonderful protests in Iran with millions of people, hundreds of thousands in various cities, and sadly, 12,000 to 20,000. Those are CBS's numbers, not mine. People being killed by the regime. That's obviously something that when the president of the United States says, we stand with you, we're going to be there. I think a lot of people yesterday then heard that when he was in Detroit at the Economic Club or on the floor of General Motors, whatever it was. When they hear that, they get nervous because, is this going to be the long protracted war that we feared that we were going to get into or whatever? My answer is no. This is prime. That you just got to cut the head off of the snake. They don't have support. That country does not have support for that regime. They want to be back to where they were in 79. They want freedom, and they're going to fight for it.
Sure.
So
ultimately,
you've got that.
Deep down.
Yep. Hopefully they get a chance to be self-determinant again. But that was just one bit of news. Then the president says we want to cap rates at 10%. I'm not against that at all. But between you and me, Oliver, maybe it should be 6 points over the Fed funds rate, which would still be around 10 or 11%. I think that's a reasonable number for, here's where banks get money, folks. From you and me depositing funds into our account and then them lending that same money out to other people at a much higher rate. Now, when they do that with credit cards as well, they are borrowing from the Fed and pushing it out to us at 27% if you're paying, over time. That's too much. They don't need 17 points or 20 points or 22 points to shoulder the burden, if you will. When look at the numbers we've just seen, Bank America, Citigroup, Wells Fargo, JP Morgan, we're talking doing all right. 20 billion apiece from the interest rate play, not their trading side, from the interest rate play. And again, where are they getting the money? From us. They're getting it from, the Fed. And so is it right that they're able to charge that much? Well, first of all, they have to go to like South Dakota because most states have a prohibition against these kind of usury rates. So I'm a free market capitalist. But when I say that, I'm saying that we shouldn't have exploitation. Yeah, you're exploiting people here. And it's not you, it's not me, it's not a lot of the folks that are watching this, but it sure is a hell of a lot of young people and people that can't afford to buy things that they want, and they have to buy them over time. And they pay at that extraordinary rate, 27%. So when Jamie Dimon cries a bunch of crocodile tears over, this could really upend the apple cart.
If that's going to upend the apple cart, then, we've got issues. Then they definitely shouldn't be doing it. Because my pushback on all of it, the one thing I will say is that I am kind of a rabid free market believer in this instance, because I think that the lenders also are motivated to not overextend themselves. And so if you start with that logic, now obviously people make mistakes, though, and that's how you get into trouble. But generally, taking ad infinitum the free market system, I'm okay with whatever rate the parties agree to, because it wouldn't be offered if they didn't think the underlying economy was able to sustain it. But that gets on the borderline of philosophical. I think there's a lot of truth to your point as well. For most people, they probably shouldn't be swimming in that deep of water, okay? Why even put, that part of the pool in play? But I get it. Tell me about the action on it, John, because I know Hans is going to talk some bank. He's got a few bank. He's been on the GS trade. You guys have been in on the bank trade too. What do you do with it here? Because the Bank of America chart looks like it just broke down pretty hard, but the XLF doesn't look so bad.
Overall, the banks will be fine, like I said, about crying crocodile tears and so forth. Too. This isn't the first time Trump or anybody else has said that we should have a cap on rates. And if that means that consumers don't get as much credit, and could that hurt the markets if consumers can't get credit? Quite obviously, it would impact the markets. Would it crack them? I don't really think so. I mean, do we really need to see, the CFIUS, the banks that are out there, that are the ones that are too big to fail? Are we really thinking they should all be making $20 billion or more every quarter on the interest rate spread? Sure. I think it's too much. And I think if they were able to do it some way other than borrowing from the Fed and so forth to accomplish it, okay, then they can do it. But otherwise, no, if you're taking money from the Fed, I think it's just wrong that they're making that big a spread on our money, because that is our money. If they make it
look
off
at the
their
capital markets, though, they're booming. I mean, look, now here's the thing. This is a very fun conversation, because then it opens up this whole thing about the functionality of the capital markets right now. Because right now, generally, I look at the capital markets and I go, it looks pretty darn healthy. So debt is kind of the fuel, the baseline for what made this economy what it is. The invention of debt is what keeps the machine greased. Now, obviously, you can overdo it. And I think there's probably companies that want to go public. There's probably more that can go public. But overall, it seems like the machine's working pretty smooth. But why push it? Especially if we're going to try and, like, you know, also on the other hand, kind of have regulations on banks that meet certain criteria. You know, why then allow them to kind of go and, you know, add more risk, I guess. Nobody wants, you know, a banking-centric problem, obviously. It's, you know, the worst kind.
Nope. Right.
It's the worst kind.
And so, you know, again, at 27% interest, whatever the max is in South Dakota, and I think it's around
quite a bit, yeah. By the way, the regional banks look good. The KRE sitting right here on the 50-day moving average. I mean, I'm not too worried about this just yet, John. I think to your point, kind of buy the dip on this stuff, you know?
Yeah, I don't think you should be worried about it. Like I say, this ain't the first time somebody's proposed this. It probably won't pass, but I'm saying from my standpoint, I would be perfectly happy with like a 6 point over the Fed funds rate.
Yeah, fix it to the Fed. I don't hate that. Yeah, why not?
If it goes up to 10, if Fed funds are 10, and that means they can charge 16%, okay. But to have it where it is right now, and have these banks crying about, well, you're the guys that are taking the risk. It's not a lot of risk really right now, guys. Look at the charge-offs, look at all the rest of it. I think these guys, men and women who are working these banks, have been blessed to have us stand behind them an awful lot and very frequently to let them post these multi-billions, and I hope they keep doing it, just not on my back. Not on our backs.
All right, fair enough. Dr. J. Hott, appreciate you. Thanks, John.